Let's talk about the crypto mania. Bitcoins shattered all kind of records when it crossed $50,000. Then we've been seeing some wild swings for the last 48 hours. It had, come down by almost 16% yesterday. Today also there's a lot of volatility. Let's go across to my colleague Mubina Kapasi, who now joins us with more. Mubina, we've been talking about how if you owned a Bitcoin, it's perhaps the best return on investment across asset classes. Look at the, what happened with the Bitcoin. Then it sold off, then it recovered, sold off, recovered. What's going on?
The fact that Bitcoin is volatile is something that we at ET Now have been highlighting since day one. If there is a swing of 20% upwards one day, the next day that could be a swing of 30% downwards. That's the very inherent nature of this cryptocurrency. It's got its fair share of bulls, it's got its fair share of naysayers as well. But guess what? If we pull forward this data a little more long term, it's interesting to note, and since 2012, the profitable days of holding Bitcoin are actually 99.9%. And as you see, over time, the volatility as well in the cryptocurrency has actually reduced quite significantly, which as well is a positive. I suppose this comes along with the fact that it has now a more mature group of investors. You've got big corporates investing, institutional investors betting. So what we call as those individuals who've come in for a quick buck are now slowly ebbing away, and you've got the more long-term investors that are entering Bitcoin. They're really looking at it as a forward cryptocurrency. Remember, so many institutions, not just Tesla, but so many other corporates. Apple as well now is considering accepting the cryptocurrency as a form of payment for its products, for some of its apps. And this is just one company. There are many more out there. Many more are also looking at it as an investment. JP Morgan's billion-dollar unit wants to now look at it as a good investment, sees a good investment potential in it. So yes, there is volatility in the cryptocurrency, but that slowly seems to be ebbing off. Having said that though, 17% decline in yesterday's move for Bitcoin as it slips below $50,000.
Okay, so that's the Bitcoin and the volatility that we've been seeing. We're going to decode the volatility. Is it an aberration or is this cyclical? Boom or bust? What exactly is going on? On the other side of this commercial break, all the way from Singapore, Akshay BD, investor and advisor to crypto startups. That conversation coming up. Welcome back. You're watching Startup Central with me, Nantara Rai, the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, entrepreneurship, disruption. Now, just before the commercial break, we were talking about the wild swings that we have been seeing in the Bitcoin. Over the last 48 hours, there's been a lot of volatility. So we thought, let's try and figure out what's behind the wild swings. We're going to now reach out to Akshay BD, investor, as well as an advisor to crypto startups, who's joining us live from Singapore right here on Startup Central. Akshay, thank you so much for joining us on today's broadcast. I want to begin by first asking you, look at those wild swings. First we talk about how Bitcoin is about $50,000, then it falls to almost $48,000, then it's back above 50. What's going on? What do you make of this volatility?
Yeah, look, thank you for having me, Nantara. I think the way to think about volatility in Bitcoin is it's attributable to 2 or 3 reasons, and we can talk about them, right? One is it's kind of it's only 12 years old as an asset class. This is not this is like an entirely new asset class, and it is traded publicly from almost day one. So, if you compare it to the stock market, it's like a startup goes IPO from the date of its inception. And admittedly, if for anyone who's worked at a startup, they would know that 1 week you're selling out tickets or your app is being downloaded in the top 10 in the App Store, and then the following month you're unable to raise capital and you think you're going to go zero. So these wild swings are just the market pricing the probability of Bitcoin being a key asset class for macro investors in the future. However, if you look at if you look at volatility across a longer time frame, which is, and you compare the volatility in 2013 to 14 to 15 to now, you'll see that it has consistently gone down as the asset class has gotten monetized. And this asset class has gotten monetized by an entirely grassroots initiative, right? Anybody could buy it in 2010. And unlike an IPO where you go and you do a road show, you have a bunch of investors and banks buy the stock or subscribe to these stocks before it gets listed, there's absolutely no guarantee that there would be any buyers. And as a result of that, it's seen this kind of completely organic bottoms-up growth. And that's part of why you get the volatility. The second reason is whether something is volatile or not is usually a relative question, and people tend to compare it to, say, the stock market to make that comparison. Now, unlike the stock market, crypto trades 24/7, and there are no circuit breakers or Fed bailouts or anything of this sort that dampens volatility in the stock market. If the stock market were to drop by 30% tomorrow, as it did in March of 2020, the central banks intervened, there were circuit breakers, so the volatility is dampened through such intervention. Whereas crypto is a completely uninhibited marketplace that trades 24/7. So those are kind of the two reasons. One, it's an emerging market class, asset class, and two, it's not really inhibited by regulators at the moment.
So one second. If there are no regulators, and this is an asset class which, let's face it, has given the best return, right? Why would you want more regulations? So to reduce the price volatility?
Well, I think the regulations the ideal regulations would treat digital assets and crypto as an emerging asset class and regulate them as such, right? And what that would mean is, regulating the on-ramps and off-ramps, such as these crypto exchanges where retail investors can go sign up and buy crypto assets. They would be regulated to ensure that they perform all the KYC, AML guidelines. They have all the customer details. Should any illicit transaction happen, you should be able to track them and things like this. And so doing this in well-lit regulations and exchanges is a much better proposition, just as you would do with the stock market, where there are registered brokers that you can sign up with and buy stock of a publicly listed company.
Or you can have circuit breakers where it falls a lot and very fast and rapidly.
Yeah, I mean, the thing is, it's just an entirely new marketplace that's global, that operates 24/7. So no single country can enforce any sort of circuit breakers or other kinds of volatility dampening measures on this asset class. The important point, though, is that it has gone from something that had a $0 market cap to almost $1 trillion market cap. And as it has done that in the last 10 years, volatility has consistently reduced in that period. And I expect that to be the case in the years going ahead. In fact, if you look at gold's volatility in the 1970s, once the US came off of the gold standard, investors had to grapple with the question of how is gold now important to the portfolio if the currency is not backed by it. And so, it would move. It was a pretty volatile asset in the 1970s. And, big macro investors like Paul Tudor Jones, who were around at the time, feel like they can see Bitcoin's ascent to a digital asset and an asset class very similar to that of gold in the 70s, which at the time was very volatile, right? So this is just,
right.
par for the course in
No, but but 1 second, Akshay, I'm going to come in there. I'm going to come in there when you talk about volatility in gold, but the point is, we don't know how much gold there is still on this planet, right? You're still mining gold. as far as Bitcoin goes, there is a finite end. And you're talking about market dynamics and all of that. But the fact is, we know how many Bitcoins can be mined on this planet and in this world. How is that not having an impact, or does that also have an impact on volatility?
Yeah, absolutely. And I think that is one way in which Bitcoin is a superior asset class compared to gold in that one aspect, which is that you know exactly how much Bitcoin there will ever be, and you know exactly when it will be mined into existence, right? So there's a supply schedule of 21 million or so Bitcoin that'll be mined over the course of the next few decades. So that's a feature. Now, volatility is a function both of supply and demand, right? And so you have these, often demand can go vertical when there isn't enough supply, and that causes prices to rise. In Bitcoin's case, it has a peculiar supply schedule where every 4 years, the amount of Bitcoin mined into existence halves. And this is called the halvening. And the last halvening happened in May of 2020. And so when you have consistent demand or increasing demand, and the amount of new Bitcoin that's mined into existence halves, you kind of have this supply shock. And the only way to fulfill the market demand for that is to reprice the asset. So every 4 years, Bitcoin has consistently had a price run because it's been repriced. And admittedly, it does sometimes get priced more towards the later end of the cycle, and then corrects down in the following year. But if you look at the price.
So then, Akshay, allow me to interrupt you there. Akshay, allow me to interrupt you there. Sorry for the interjection. So right now, when you're talking about repricing and that it happens regularly, that it's cyclical, what we are seeing today, would we therefore be in the middle of a repricing? Because whichever way you do look at it, in the last couple of days, a lot of commentary that has come out has been not in favor of cryptos, right? Whether it is Janet Yellen or whether it's Elon Musk who's taking to Twitter and talking about how the Bitcoins, etc., are very expensive. And you attributed the Musk mania in the past for the rally. So, it'll be only fair to also attribute his latest tweet to a sell-off.
Sure. Look, I mean, there are always, these events that happen that may cause a short-term price increase or decrease. But in the larger scheme of things, the important point is a lot of these macro hedge fund managers and corporate treasurers see place for Bitcoin in either their portfolios, I'm talking about people like Paul Tudor Jones, people like Jeffrey Gurnulock. They all acknowledge that as the central bank intervention in the economy continues to increase, and as there's $18 trillion worth of negative yielding bonds in the world today, and all that money has to go somewhere, right? If they're seeking yield in new asset classes, and crypto and Bitcoin is just one of them, Bitcoin specifically. And so you have a lot of these hedge fund managers, macro hedge fund managers, allocating capital to Bitcoin. You also have companies allocating it to Bitcoin. Now, in the natural course of things, you also have people who will come out and make statements on both sides, which may or may not cause a short-term price movement. But if you're an investor, and if you have ever bought and held Bitcoin for longer than 3 years, you really never lost money.
That's a fact? Or is that something those in the pro-crypto camp say? How can you say that? It's a very big statement to make. It's a very loaded statement to make.
Fair enough. I mean, you can go. I mean, this is auditable, right? So the great part of this is you can go and see. There's a website called lookintobitcoin.com. Allows you to see how many days of holding Bitcoin have been profitable. Of course, it's had a long, big rally now. So almost 99.9% of days, if you'd ever bought crypto, you're kind of profitable. In fact, even if you bought at the 2017 top, which was around $20,000, and held on and didn't sell, you're still up over 100%. And so the important point is when assessing the returns of a emerging asset class, it's important to kind of take a look at it over a longer duration than just say 3 months or 30 days. And over a longer duration, it behaves very predictably.
You know, in fact, we have also got a graph out which just showed the reduction in volatility and the wild swings in the Bitcoin. You have also likened it to a startup. It's a startup, therefore, which has hit $1 trillion in market capitalization. That's another way to look at it, isn't it, Akshay? And with this volatility, a lot of people will say, hey, this is why, you know, so many countries don't legitimize it, because you can stand to lose so much. But you're making an opposite argument.
Right. And, you know, it would be like saying because startups have a volatile journey to their IPO, we must somehow regulate or ban them. And that's clearly like something that would not be productive for a nation's economy. And I think if you look, and the important part is Bitcoin can help make your portfolio, whether you're a retail investor, whether you're a company or even a country, embrace this emerging technology, right? And let me give you a quick comparison. The market cap of Bitcoin is somewhere around around $1 trillion. If it is, and it's better than gold for all the reasons gold is good for in one's portfolio. If it is true that it can complement gold in your portfolio, then the market cap of gold is about $9 to $10 trillion. So it still has a long ways to go just to capture the market cap of gold. And so, this is admittedly a new class of assets, and it will take time for investors and regulators to all grapple with it. But the right thing to do is embrace it as part of the new emerging financial internet, which is what all of us in the crypto space are really excited about. If the internet allowed you to send information from anywhere to anywhere in the world, crypto will allow us to send value from anywhere to anywhere in the world.
Well, let's see if Bitcoin does become, or cryptos rather, become the digital gold legitimized by all sovereigns, of course, including India. We all know about the bill that is pending. But Akshay, it's been an absolute pleasure talking to you. Thank you so much for joining us on today's edition of Startup Central to help us understand the kind of volatility that we're seeing, the wild swings that we've been seeing. Thanks a lot for your time.
Thank you very much, Nantara, for having me.